Hi, this is Zach Meir with the Bulletin Board Heroes here at Zach's Traders Cafe for Tuesday, the 26th of November. Starting with the FTSE 100, which has stalled a little bit at the, I suppose, the existing November highs, around 8,300. We've got potential support there at the broken October resistance line there, 82.40, and then below that, the 50-day line, 82.25. Ideally, we close above that today. Otherwise, it's a potential test of the 200-day moving average, 81.30. But overall, with the RSI in the 50s, we've got to say that the glass is half full rather than half empty, even though we look a bit stretched. Moving on to the DAX, and here it's been struggling with its October resistance line there at 19,500, bouncing off the 50-day line today, which is good news, 19,200, but we still have to factor in potentially the market hitting the floor of that rising trend channel, 19,000. Basically, we're still in a range between 19,000 and 19,500, waiting for an end-of-day close outside those parameters. Moving on to the Dow, which has delivered what's potentially a runaway move. Well, obviously, one presumes it'll be a down day today, but top of, that resistance line projection there from back in August, heading for 45,100, and we're looking for that imminently, even if we have a turnaround or turn back down. Ideally, we stay above 44,000, which was the old price channel top there from this time last year. Still can't rule out a test at the top of that gap on the 50-day line there, 42,800, but maybe we'll need something rather closer to World War III than we have at the moment. Moving on to Bitcoin, which I suppose has got everybody saying, I told you so, in terms of not being able to get through the 100,000 level, but we are trying to find support now at the old initial November resistance around 93,600. We got support there from a previous target, 88,600, which is a March resistance line projection, and ideally, even on a sort of more severe pullback, we will find support just under the 90,000 area. Anything lower than that, we would start to get slightly concerned. On the upside, still waiting for an end-of-day close through 100,000 to give us 120,000 as a best-case scenario target for this market. Moving on to gold, where just when it looked as though we were heading back to the highs, we haven't. Basically finding resistance at the old support area through 2730. That was quite an important number or area back in October and initially in November. We bull trapped through that up towards 2350 and we come back down again. But still, we've got that rising trend channel from back in February, the floor of the channel there, 2580 now, and as long as we remain above that, we're still in a positive or constructive type of mode. Moving on to the stocks, and no real big names today, but Bison is the one to start off with. Falling trend channel there, but we're back above the 50-day line there at 3.1 pence, looking for, 2.1 pence and looking for 2.5 pence. Perhaps by the end of next month or even sooner. Obviously, we have the prize of heading up towards 3 pence if everything goes well and we break out of that falling channel. Very good RNS from Cadence today, which the market has sort of appreciated. It did actually look as though somebody was waiting for something in recent days, and we've got it today, but unfilled gap to the upside both last week and this, so that might suggest turnarounds on the way. There is a resistance line there from back in March to be broken at around 2 3/4 pence, so that's the big obstacle to a turnaround at the moment, which could lead us as a best case scenario target through 3.5 pence by the end of next month if we can stay above the latest gap at 2 1/4 pence. On to a stock which I think I look at, nobody else does, which is Essensys. Here we've got a rising trend channel base. We've gapped up off what are now rising 50 and 200-day moving averages, so it suggests we're going to a golden cross, and also it suggests we've got enough ammo to head up to the top of that rising trend channel from February as high as 41 pence, hopefully by the end of the year. But surprisingly encouraging chart there at Essensys. On to Helix, where I see somebody who's got brains has been adding to their position, at least as reported on X at the moment. Rising trend channel here, bouncing on the floor of the channel earlier this month. The floor there currently just below 20 pence, above 20 pence, but still looking for 32 pence maybe for December or by the end of January on Helix exploration. But the key here is staying above the floor of the channel. Onto a stock which I don't normally look at, but it looks like it's given one or two people a bit of a surprise, in the sense that I think the last update from Halford's was rather negative and all doom and gloom, and that was ahead of the situation in terms of the latest interim results today. What you can see here is we've had a bear trap gap reversal from below the August support there, £1.35, above that. Looking for as much as £1.70 at the top of that broadening triangle base. Maybe we get that by the end of January, but the key here, staying above £1.35. Moving along to Kinovo, which I believe had some results out today, which were okay, at least. And here you can see that we've gapped up off the floor of that rising trend channel, as we did the last time we were in an equivalent position here back in May. And looking for the shares to not only hold above the 50-day moving average there at 62 pence, but head up to the top of a rising trend channel from back in basically this time last year as high as 85 pence, maybe by the end of the year. Ideally, we stay above the 200-day line at 58 pence in the meantime. On to Ondo, who I interviewed a few weeks ago. Seems to be still going well with all these blue candles there. We gapped up on the 12th of November, and we've been looking for 33 pence as a target there. It's the third target there, over, or at least by the end of this month. Otherwise, obviously, we're looking for the upper 30s, which is the best level for the shares that we saw back in the summer of last year. Looks like Parkmead's on its way as well at the moment, with a gap through the 200-day moving average. We haven't been above that since back in April. Rising 50-day line as well, and the view here is that we could hit hit our second target there. The first target was 14 3/4, the second one up to 22 pence, and we're looking for that by the end of next month, while we remain above the 200-day line. Moving on to Quadrise, which seems to have surprised almost everyone with its latest news. Here we had the shares within a rising trend channel base. At the top of that was 3.6 pence, but no, I don't think we really expected it to ever go there. But on the back of today's news, we've gone up to 3.6, above 3.6. We've got a final target, near-term target, 6.5 pence, which maybe would happen by the end of next month if we stay above that 3.5 pence zone. But the key here was the break of that resistance line there from February around 2 pence, which is strange price action yesterday, which gave the impression that we were actually peaking out at 2.5 pence. On to Roquefort, which seems to be trying to be back in business. We've got a bounce off bounce from below a rising 50-day moving average, so above recent support around the 3.6 pence level, looking for a retest of this month's resistance through 6.5 pence. But if you're cautious, probably wait for an end-of-day close above the 200-day line at 4.8 pence. On to the last two. The first one, even more spiky than Roquefort, and it is Sealand Capital. Here it's interesting that we bounced off that old October resistance there at 0.18. Above that, looking for the shares to retest the best levels by the end of the year, and a good start made on that so far today. Finishing off with a stock which probably on a fundamental basis, but people might be rather upset with, or at least on a share price basis, but we do actually with Union Jack have a bona fide technical setup, strong one as well. Gapped down last month and gapped up today off the low, and also went to the lows this month, but the RSI higher, so it's basically bullish divergence. Initial target here up to 11.8 pence. If we can break that, then we could be back up to 16 pence, but obviously given the lay of the land, that is quite a punchy call for the end of the year. Ideally, obviously, we stay above the 10 pence zone. That's it for me today. More updates tomorrow.